Hey, welcome everybody to the 40 Finance channel. Today we're going to discuss this article I just read. BlackRock lists 3 reasons not to buy the dip. So BlackRock, obviously a huge investment firm, coming out and saying avoid buying the dip in this current market cycle. Let's take a look at their 3 reasons here. First of all, it's interesting to note they lead off with this fact. U.S. stocks have seen the biggest year-to-date losses since the 60s, but investors should still stick to the sidelines, BlackRock says. And let's go down these lists. Number 1, increasing downside risk for profit margin. We covered this a little bit yesterday when I kind of did a FANG overview. We expect energy crunch to hit growth and higher labor costs to eat into profits. The problem, consensus earnings don't appear to reflect this. So I agree that this is a potential problem. However, the consensus earnings estimates don't appear to reflect this. I'm not sure I agree 100% on that. Yesterday we looked at 4 stocks in the FANG atmosphere: Apple, Google, Amazon, and Facebook, and I was calling out the difference over the year-over-year earnings, consensus earnings estimates, and you saw that sales are projected to go up slightly in some cases, double digits in more cases, but the EPS numbers were down. So that's your sort of bottom line. That's the profits, and I would argue maybe consensus estimates for EPS are accounting for these extra costs. We'll see if they're accounting enough for them as time goes on. They use an example here. Analysts expect S&P 500 companies to increase profits by 10.5% this year. That's way too optimistic. So they're taking the S&P 500 as a whole and talking about the consensus increase in profit projections. I think if you break it down on more of a single stock level, particularly on the tech side, you'll see that a lot of these more beaten down stocks have had revisions. All right, next up, they say equities aren't much cheaper. Valuations haven't really improved after accounting for lower earnings outlook and a faster expected pace of rate rises. The prospect of even higher rates is increasing the expected discount rate. What else here? Higher discount rates make future cash flows less attractive. Okay, so the concept of equities aren't much cheaper. I would go ahead and argue that. I'll give an example from yesterday. Let me scroll over to Yahoo here real quick. I think we were looking at, let's take Microsoft. Microsoft was another one that I covered yesterday, and I showed this table, this valuation table. These are historical valuations dating back to several years ago. And if you're buying into Microsoft's forward PE, which is based on a consensus estimate as of today in Yahoo's world, the argument that equities aren't much cheaper from a valuation standpoint, I would say is false. Because you can see here, June of 2021, we had a valuation multiple plus 32. And June of 2020, you're also in that same category. As a matter of fact, you can even go back pre-COVID to 2019 and you see the multiples 26. Now, I will say, as I said yesterday, that dating back pre-COVID, you start to get back to 2016 or so, there's definitely a lower multiple that could be had for Microsoft if we went back to 2016 times and it landed at a 20 or an 18x. So maybe the 23 is high, maybe it has a couple points to come down to fit into the historical narrative on interest rates. But the fact that they're not much cheaper in terms of EPS compared to 2021 and 20, at least in the case of Microsoft, I would say that that is false. All right. Last reason here, growing risk the Fed tightens too much. I think we all know this. Signs of persistent inflation, like last week's CPI report, may fuel the Fed to do more, is what they're saying. We turned tactically neutral on equities last month. Stocks slumped last week near lows of the year. We don't see a sustained rally until the Fed explicitly acknowledges the high cost to growth in jobs if it raises rates too high. Okay, so they're basically waiting for a press conference, right? Where they say the high cost to growth in jobs is at danger and they're not going to increase interest rates anymore. That would obviously be good news for all of us, particularly if you're in tech and growth. However, I do think that that day will come. I don't think that that day is coming, certainly not over the summer. I've said it before, I'm kind of in that back to school period, post Labor Day, maybe into October, that the increase in interest rates and other tactics that they're using will start to bring our prices down on the consumer level. And that is, of course, separate than oil that kind of runs at its own little production cycle. But in terms of groceries and stuff like that, I would say, we've got a bumpy ride in the summer, and then I fully expect prices on these CPI reports, PPI, you name it. I think that we'll start to see pullbacks heading into September. That's coming from me. It's just an opinion on how I see things going. But if you are out shopping for, in particular, things like furniture, go to your Home Depot, fertilizer, there's just, stuff is not cheap, okay? But I compare that to where it sat last year. So if you own a home like I do, and you're doing lawn care and flowers and all this other crap, you will notice that things are cheaper. It doesn't mean that they are free or they're on mega sale, but I see a lot of items that have come at least back down to reality from where they sat last year. All right, so that is the BlackRock world. I want to say what's up to H. Montero, to Amber, Kevin Hawthorne. Always good to see you guys. And I had another interesting headline that popped up in my email. I don't know how true this is, but this is a good website, by the way, payments, if you're into PayPal, Visa, all the sort of fintech names. Bitcoin plummet triggers $1 billion in margin calls. All right, so let's take a look at what we have here. About $1 billion guaranteed by some 260,000 market investors was liquidated due to margin calls in the past 24 hours. We don't know what's going on with Bitcoin. The day trading frenzy during COVID helped take cryptocurrency to new heights. The crypto market has since lost 66% of its value. Let's get into this margin information though. Has Bitcoin's plummet has added $2 trillion in losses to the overall market. And then, of course, we had the Celsius debacle, which I don't do a whole lot with Celsius. It's not a company I follow. The crypto, the little tiny bit that I do have is over in Voyager. Celsius, which claims to have 1.7 million customers, according to extreme market conditions, they basically paused all withdrawals from their platform. Now, what I wanted to look for in this article was very specifically where this margin information came from, and I don't know if I see it, but it wouldn't surprise me. The thing that's interesting, though, is if you are using Bitcoin, or if you are using margin to purchase cryptocurrency, particularly in this environment, that's a risky game. And I just did a video on a margin loan that I'm in the midst of using right now, but it's not to buy more securities, okay? It was for a personal expenditure. I have the plan to pay it back over the short term, and I think that that is where you get a lot of different opinions on margin. I tend to agree with the fact that using margin to buy more securities can be a very, very dangerous game, particularly in this market. However, using your equity margin to make short-term purchases with a clearly defined way to pay that back, and using a very low percentage of your available margin, I think is a very helpful financial tool. So if you're interested in learning more about that, I have the video up on the channel. All right, let's see. We got a couple questions here. If Bitcoin falls under 20K, Michael Saylor and MicroStrategy will get margin called. That is probably true. And I know that the media is circling like vultures on that guy. I saw a couple bits on CNBC this morning. Let's see what else we have going on in the market. We have T-Mobile gains after 5G milestone. Okay, it's good. What's this? FedEx rips after laying out post-Fred Smith plans. So FedEx is up 13% today after the company announced a 52% increase in its quarterly dividend, adjustments to the long-term executive compensation program that included lower CapEx revenue target, and 3 new board members. Okay, so it sounds like big FedEx dividend increase, and that has risen the price up to $2.28. Right now, the forward yield is 1.49%. I don't know if that is updated on the news or not. What else do we have? UPS gets new digital technology chief. Revlon, so this is an interesting one. Here's your next meme stock. So Revlon is almost certainly going to bankruptcy. Bankruptcy is reported imminent for the storied cosmetics retailer Revlon. In a counterintuitive jump, shares of Revlon surged in the first half of Tuesday's trading, resulting in a brief halt. So that is pretty amazing. I assume, without looking at this, that it is kind of a Wall Street bets game. It is also one of the heavily shorted stocks, 38% of its total float held short. So maybe that's what people are into on this one. What's going on, Lion? These idiots waited way too long to raise rates. I totally agree. I think that I'm on record somewhere in a video in 2021 just wondering, like, what are we doing? Like, why do they keep... Remember when we were joking about the talking about raising interest rates? And that went on forever. And at the time, you know, a 0.25% interest rate hike is basically Zippo in the grand scheme of things, particularly when you are at 0%. So I'm 100% with Lion. All you had to do, I mean, hell, you could have done 0.10%, right? And made a run at this thing just to get stuff moving in the right direction. Instead, as always, the pendulum has surged way too far, and here we are today. All right, I'm going to go back to the news here, see what else we have, anything of substance, Oracle. This the cryptocurrency world is going to be interesting, and just to share my thoughts on where this world is going, let's see if I can pull up the coin market cap. Yeah, I don't know how well it shows on the screen. Let me see if I can get it to fit in a little bit better. As it pertains to stuff that I actually do, I have a very small amount of Bitcoin, you know, was in the neighborhood of $1,500. I have no idea where it is now. But I did have success with Bitcoin using an OTC ETF called GBTC. Did a few videos off that. I basically made plus 50%, plus 70%. I can't remember exactly. But then I fell into this world where people were talking about, you know, you really need to hold your Bitcoin that you do have and not use third parties. So I took my profits and very slowly started buying a very small amount of Bitcoin. Also have some Ether in there. And I actually also bought some USD, and I bought some Voyager, because if you bought enough Voyager, this is an interesting tip that might be good for some of you right now. I believe if you're in Voyager and you buy approximately 100 tokens, right? I realize that these things are far from real currency, but right now you can get 100 tokens for 63 cents each. It's only 63 bucks, and that boosts your interest here on things like USD and Bitcoin. And the next level from there is like 5,000. So I'm probably not, certainly not after this news, I'm probably not going to do the 5,000 level. But there is some, loose change gambling you could have in this world just by buying little bits of Bitcoin. And I probably will. I'm waiting to see if it goes under 20, and then when I buy, you're talking about fragment of a fragment of a fragment of a Bitcoin. I'm by far not the highest roller. But I do think that we could easily wake up in 5 years just by the nature of the declining supply of Bitcoin and the fact that people lose their wallet keys, people die, etc. If the worst thing that Bitcoin is a digital baseball card, I'll take a small, tiny piece of it, just knowing that, over time, baseball cards, antiques, whatever they are, do go up, and this one probably has more utility than that. We'll see, but it's starting to get in that world where how high and low this thing can go, and so having a little bit on the next spike, which could be years away, it might be fun to open up your Voyager app, 2-3 years from now, and boom, this thing is sailing. All right, Roth is here. How long should we wait? Probably, I said it earlier. I don't know if you're here. I think back to school is our next best chance for some sort of bounce back the way things are going. We need those reports that keep coming out higher. So CPI, PPI, inflation, oil prices, it just is not ending. And we just had something come out today. I think it was the PPI. Let me see if they got the report here. Is this one? Yeah, 8:34 a.m. Producer Price Index, which is wholesale prices. It was plus 0.8% versus the consensus, basically flat with consensus, and plus 0.4% prior. Almost 2/3 of the increase was the prices for goods. More than 70% of that increase comes from a 5% advance in prices for final demand energy. And let's see, 10% year over year versus 11% consensus, so down a little on consensus. Core PPI plus 0.5% versus 0.6% consensus, and then plus 8.3 year over year versus 8.7. I don't know what the difference is between these two year over year numbers, but bottom line, it was still up, it was in line, and I would say that it's going to take another couple of these reports. I mean, this was the May report. It's hard to imagine prior to August, September, that we're going to start to see these things get slashed in any meaningful way. And it's taken me a while to come to that conclusion, but I just don't see, it's very obvious after I read more and study more, and you guys are probably ahead of me on this, but you start reading it and it just takes a long time for interest rate hikes to really feed through the loop and end up on consumer goods prices. And then on top of all that, we have this oil thing going on. And so what would normally squash demand, right? And if you squash demand, you lower prices to some degree. The problem is now is we're squashing demand, which is going to be good for prices over the long term. But we have the elephant in the room that doesn't respond to that, and that is the gas prices, and every consumer good known to man comes into contact with oil in some way, shape, or another. So it just feels like fall is going to be better. I can't promise you that, but that's my prediction. I've been saying 6 months to the people I hang out with. 6 months from today is right around November. It doesn't mean that I won't be buying things. I plan to pepper in stuff all the way through. I don't know what the bottom is, and I don't know when it turns around, but I do like the way some of these prices stack up for the next 5 years. And that's what this channel is. It's not make money tomorrow. All right. Derek Ridland's here. Good to see you. Many thoughts. This live stream is overdue. It is. So in case you're wondering, because my publication schedule is all over the ice right now, I've told you guys before, I do a ton of stuff in baseball, particularly in youth baseball. I have a son who plays at the high school level, and then he has a summer team. And then I have a 9-year-old who I'm the coach and run that whole show. And it's not just like it's not just like once a week, right? We'll probably end up right around 30 games between April 1st and June 26th. We'll probably end up with 30 games. So it's a lot, but I love it. It's what I really, really enjoy, and it's awesome. It's an awesome sport if you like baseball, to watch the development of kids, because there's so many intricate little things, right? There's catching the ball, hitting the ball, pitching, playing a certain position. It's really rewarding, but we are entering the home stretch of this particular season, so apologies for the publication schedule, but that will be clearing up here soon. Derek goes on to say, crypto is stupid. Fair enough. Second thought, why would we roll the dice on this risky crap when blue chips are on discount? Totally fair. Everyone has their own own opinion. I would agree that if I was down to my last dollar, if I was going to go between, say, QQQ, like I always talk about, and crypto, I would probably, almost no doubt, put the dollar on QQQ. Love for the 90s, good to see you. Derek says, third thought, this is the opportunity we have waited for. We will make so much money from all of this. Don't get cute and screw it up. I think that is pretty fair advice for everybody. With me, I'm some of the stuff that I have that's way down, I'm just semi-ignoring right now. Instead of buying the dip into individual stocks, like I'm sticking with the Qs. There's plenty of deals out there. My brain really wants to go in and average down on some of the riskier plays, not necessarily crypto, but some of the riskier plays I have in my portfolio. But I'm keeping those thoughts off to the side, and I'm sticking with the Qs. It may not pay off in 2022, but it will pay off eventually. And I think that Derek's, he's talking about blue chip stocks. Obviously, take your pick, because I think yesterday, don't quote me on this, but yesterday I think 99% of the S&P 500 was down just for the day, right? And I think if you look at it historically, I thought I had that thing on Twitter. Let me see if I can get it to show up. Tweets, likes. Okay. So this guy says, oopsie. 100% of the QQQ is down, 99% of the SPY is down, 99% of the Russell 2000 is down. That was yesterday at 10 in the morning. Don't know how it ended up shaking out at the end of the day. I thought I had some better stats, though, on the market as a whole, but I usually just like things. This guy is funny. I'm a Zillow stockholder. It's another one I would average down, but very smart to completely exit home buying 6 months ago. So they got laughed at. They got laughed out of the room, and that did turn out to be a genius move. Anything else? No. I wanted to give you guys some cool stats on how much of the market is down for the year, but I'm not seeing it right now. If you go, you know what, here's one thing we can do, and I've done this video already. Premium, let me go to Stock Screener. There we go. Here is all USA large and mega caps. And here is performance. And here's your 5-day performance. This is not sorted by anything meaningful. Let's sort it by 5-day performance total. All right, so if this is correct, in the S&P 500, you have one stock, CME Group, and I should say not S&P 500, I should say all large and mega cap stocks. There's one over the past 5 days that is positive, and the rest are red, 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 all the way down. That's a lot of big stocks, and these are not penny stocks. These are companies. I would say the bulk of these companies are going to have EPS. And who's the big loser? It's going to be easier for me to sort on this one. Sort to the losers. Minus 34%, DocuSign, which got crushed. Roku, Square, Unity, Coin, blah, blah, blah. We've seen all that. And then let's take a look at their last month. I'm sure the oil stocks are up. What's AR? Antero Resources, I think that's exploration. Southwest Energy. So this is the last month on all large and mega caps. And you get to, I can't count it all, but that's not a very big list of winners when you talk about large and mega cap stocks. And let's just compare the red line going down. How many scrolls does it take to get through the red line? You see where I'm going here. It even had to reload. Quite a few. So anyone who's touting an extremely profitable last 30 days, they're either in energy only, which is fine, or they're lying because these mega caps and large caps are absolutely crushed across the board. So to Derek's point, summarize, there's plenty of discounts going on. You just have to figure out what suits your risk profile and what type of companies you like. All right. Lion says, I think we need Elizabeth Warren and Bernie in charge of our current economic turmoil. I'll tell you what, I'll take anybody at this point. So Biden is supposed to go over to the oil countries. Let's see if that's on CNBC real quick. Right here. Just read about this. If I can't find it in 2 seconds, I'm not going to do it. But Biden's supposed to go across the ocean and visit the oil producers. I don't know if it was Arab or Arab Emirates or wherever it was. But unfortunately for him, he called them out earlier in the year for another matter. And so he's probably spoiled that relationship before it even starts, and he wants to get oil production ramping back up so that our prices come down. And it's just truly unfortunate because we are sitting on plenty of oil, but the combination of environmental restrictions and just this administration in general has pulled a lot of that back. So fracking, Keystone Pipeline, all the things that would be super helpful right now are not available to us. All right, Lion says it's like narcissistic personality disorder that Amber, others have. Okay, I don't know what's going on there. I'm glad I didn't jump on the crypto bandwagon. Stay within your circle of competence. That's what Lion says. And that's fair. You can't do anything with crypto. Gold, you can make jewelry. Oil, you can drive cars. Totally fair stuff. It is definitely a speculation game. One thing I'll say about gold, though, that shocks me, and my face might be in the way on this. Let's see if I can scroll this over. So I'm so shocked in this current environment. Here's your 5-year gold. Okay, there's December of 2019. February, let's just go way pre-COVID. January 6th of 2020, gold at 1,500. And we obviously went through the pandemic, and here we are in inflation times, and for whatever reason, gold is at 1,800. I don't know what the max chart is, but the guy who bought on 2017, how about this? Lowest part between 17 and 18, you bought for 1,100. And so, you know, you're getting close to doubling up there, right? Half of 1,100 is 650. Yeah, you made about 50% or so back in 2018, but you just would have figured that gold would have went up more. At least that's what I would have figured. And silver is in the same way. So you have a lot of silver heads out there that have been touting this one for a long time, particularly since it is used in some technologies, I believe, like solar panels, microchips, and whatever. And there's been nothing in this game. You know, again, you bought 2018-ish. You bought for 14, so not quite 50% as of today. But for as much hoopla as those precious metals get, it really, you know, it hasn't shown up on the actual profits for as long as you've been in them. So this is a 5-year chart, right? And even with the meltdown on the Qs, you were at 140, 137, you're 100% up, right? So I don't know. I'm not saying that gold is worthless. I actually have a small bit of the pure gold coins, right? Just actually in my house. It's just more of a fun collectible thing for the kids. But, you know, it really hasn't performed. We'll see if that turns around quickly, though, as we go deeper into this game. Let's say hi here to Henry Gonzalez. Did you see where the Fed just announced they will stop all sales of the EV Mustang? Oh, really? Let's take a look at that. That should be... I don't see that yet, but that could just be coming in if you just read it. Let's see. Ford EV Mustang news. Ford is, okay, you're here. Good call, Henry. The EV could fail to start or become immobile while in motion due to a battery malfunction. Stop sale order to its dealers for the Mach-E crossover. Huh. Ford says 50,000 were sold in the... 50,000 are affected by the problem, which is half of the 100,000 that are produced. Very interesting. Good call, Henry. Barca TV, I'm not energy only, but he's shorting cannabis. Very interesting. I've stared at cannabis stocks more than once. I hate that it is, that the government, you know, the legalization path is everything. And then who becomes the biggest? I don't know. I'm not smart enough to figure it out. So I stayed away. I can't imagine inflation if Elizabeth Warren and Bernie were in charge. Yeah, me neither. Good move, Barca. Cannabis stocks are trash. That's hilarious. A Moo customer support rep said, I'll get 11 free stocks if I deposit $2,000. I have no idea. So that, I think, so Sniff, who comes on here every now and then, good to see you. I don't know, I know what Moo is, and I've seen the ads for it, but it's not one of my affiliate links. I don't have like that offer to give you, or I'd be happy to do it. Derek says gold is down because they just found that Spanish galleon with 5 billion in gold ingots. I don't know if that's true or not. Yeah, it must be, because you're saying 17 billion in gold. Those lunatics make Biden look like he knows what he's doing. That's funny. Chinese leader Xi needs to grow a pair and stop being a beta. He's doing another stay-at-home order. Gee whiz. So I bought some of this K-Web. I just couldn't pass it up anymore. I usually don't buy Chinese stocks, but I love, if I was going to buy standalone ones, they would be all the ones that are in here. And what's really cool about this ETF, if you have any interest in this market, is they hold the real shares, not the ADRs. So Panunadu, or whatever that's called, it looks like they've got ADRs. But Tencent, these are real, Class B, etc. And it sounds like this could be heading for another dip if this news is correct. KWeb, they're saying, well, this is May 31, so never mind. Lockdowns ease. Let's see what this one is. June 6th. I haven't seen that Chinese news yet. I assume you're correct, the line, if you read it. Chest ads here. 2 old school stocks, IBM and AT&T, have held up in 22. And that's super interesting because they have struggled with declining earnings per share, and they haven't done a whole lot on meaningful stock buybacks, but you do get this dividend, right? So that's what keeps investors coming back. On a year-to-date basis, 1.25% if you bought on the very first day. If you bought 5 years ago, you're probably out a little bit. 29 down to current. 1 year, it says minus 11%, but that looks like it makes the assumption, obviously, on year to date. If you would have bought, let's just say this October dip, you'd be about flat. All right, PayPal needs to do a buyback ASAP. Yeah, I'm going to do a PayPal update probably tomorrow, but they definitely need something. I'm in the point with PayPal where it's so ugly that I have no choice but to hold. I have no concerns that the company is going bankrupt, but the ugliness refuses to stop. And honestly, they have that connection to Bitcoin, them and Square, which is probably going to make things even uglier. They did get some news about Grubhub. Grubhub partners with PayPal Visa to offer drivers flexible payments. I don't know. Provide drivers with faster and more accessible payments. Instant cash out, whatever that is. I assume that's for people to get paid for the work that they do and not for customers to pay Grubhub, but I didn't pay too much attention. Do I think Chinese stocks are less risky than crypto? That's a good question. I would say yes, they are less risky because there's a legitimate business behind them. On the same token, though, you know that the government can screw it up, right? At any point, they can screw it up. So KWeb, there's a million ways to do this, right? But I had KWeb back in like sort of pre-Trump time. Maybe it was all the way back in 2018. All right, so let's just pretend it was here. Maybe I was in the 60s. I don't remember. And then Trump took office, got in big fights with China, and that stuff really got destroyed into that, what's it called, New Year's or Christmas Eve crash. So it went down 39, right? And then we had COVID crash. It only took it down to 41, and then it went to the moon, so to speak. So I don't think it's going to head back here, but then reality set in, and they started closing the country, and it's down, down, down. I finally got to the point around $30, and I've bought and I've lowered since then, and I'm like, you know what? The risk to the downside, it's still there. But when KWeb announced that they were switching to ordinary shares and not ADRs, I was like, you know what? It's worth a shot. It's worth a shot at $25, $30. My goal is to get to 100 shares. I think I'm at 60, 70. So it's not a huge bet, right? And obviously, like everything else right now, it's probably longer term. But I certainly believe that there's more metrics underlying an ETF like this than you would see with Bitcoin. The only catch with compared to Bitcoin, though, is you have that upside, that rocket ship upside that simply doesn't exist in the normal stock market. Of course, you also have the rocket ship downside too. So I think with T you receive shares of the spinoff. Okay, so I don't follow it that closely, but that would make sense. So the guy who had, let's just say, 100 shares, and then they did the HBO thing, I think it was. So maybe you have 110 shares now, right? So you did make money. It just didn't really show up in the performance of the stock itself. 4chan is leaking in the chat. I don't know. Who's 4chan? I don't even know. You might have to. I'm a little slow on the slang if there's something to that. Also, might put a zillion into Facebook and BLK. Is that BlackRock? Yep. I kind of thought about this one too, in terms of another way to play this game. They just have so many different levels of investment. Looks like their high was 953. Financials are interesting, right? Because there was a time in January where everybody's like, financials, 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 right? And how about Wells Fargo? Not really a stock that I'm big on, but let's see if we can identify the financial swing. Here, this is what I'm talking about. So we got into November, and I think, we were talking about interest rates and stuff, and everyone's like, financials, go there, interest rates, they're going to be, make so much money. And in Wells Fargo's case, it get to 58, maybe 57-ish, and look where we are now, right? Because the interest rates, for whatever reason, the interest rate increases are not leading to as much revenue and return as these banks expected. So the fly into financials trade, like so many others, turned out to be at least a temporary bust, particularly if you're doing that on February 9th, you got in at the peak. I see the point in Chinese tech stocks I don't see the point in Chinese tech stocks with Facebook and Netflix so cheap, and that's 100% fair. As it relates to me very specifically, I have plenty of exposure with my QQQ on those stocks. And most of the KWeb stocks are not in there, particularly the ordinary shares. So my situation, there's room for KWeb, but I understand your point entirely. Lion, so what is your short-term plan from now till the end of the year? Try my best not to sell and try my best to buy. And mostly Qs, and if there's what I'm hoping for, just to be real honest, and I think we're all hoping for this in some way, that we would find a balance. I'm not expecting bounce back to all-time highs, right? But let's say you can survive and invest in things that are at least flat, right? And maybe make a couple bucks on a few trades that should turn around. Big one for me that would come through would be Magnite on the ad tech side. Don't know if that's a potential for 2022, but it could be a 2023. But if you can make some profit, like I made for, who did I just sell out of recently? TJ Maxx, right? So I took the retail high on TJ Maxx. It's way back down into the 50s. And something else I was positive on this year that I also sold. So I have roughly $3,000, $4,000, $5,000 in pluses in capital gains right? And then near the end of the year is likely when I won't sell all my PayPal, but I sure as shit am going to go back through those first 10, 20 shares I bought that are probably $200 some or 175 or something, chop those off so that I'm not eating the tax on my gains, and then my cost basis for PayPal will return to a little bit of a normal world and start over from there. So that's how I'm looking at it. You know, I have probably some opportunity. Let's take a look at the holdings here. So everything's a bust right now, but opportunities for the end of the year to actually do something, you know, halfway decent. Visa would be the largest candidate to have a turnaround before the end of the year, in my opinion. Could get something out of TQs. I think that's 2023, though, the way it's looking. Saber's only $1,000, but Jesus Christ, if it could just get back to 11 bucks, I would take my money back on that. Now travel's getting busted. KWeb has a chance to go up 20, 30% before the end of the year if things go as planned. So those are ones where I could potentially make some like legitimate money without you know, having to hope for the stars. But we'll see. In the short term, I'm sticking by the very simple, like the sort of Derek Ridland theory, right? I'm sticking by like, hey, this is not, it's ugly on paper, but it's not a bad time to buy, especially if you're buying, in my case, the Qs, but that means Google, Microsoft, you know, Adobe. Like, these companies aren't going to lose in the long term. They're really not. And it might be an ugly year for them, but I still, if you watched the video yesterday, those guys are still anticipating double-digit revenue growth for this year. Now, it won't trickle down into EPS growth, probably. They'll be lucky to hit flat or perhaps, you know, a little behind flat. However, the sales story is still there. It's just the inflation story, unfortunately, is trimming some of the EPS. All right, easy move to keep buying the dip if you're under 40, absolutely. Thoughts on Disney in the 90s? I think Disney is interesting in the 90s. I think that their next earning call is going to be interesting. I wouldn't mind having some Disney. I know Lion's laughing because Disney's woke now. But I definitely see, you know, the parks as a huge, huge play for Disney. And even though the Disney Plus might sputter slightly, that ad-supported tier, which is connected to my Magnite stock, if that comes to full fruition, that could really be big for it. So, and I think Disney, like, listen, they got hit with a lot of expenses during COVID. It's going to take time to burn some of those off, but 2-3 years from now, I don't see how you're not plus side of 90 for sure on Disney. Literally save every penny you can, and when you have days like yesterday, put in a big order. Are you still holding TQs? Yes, I am. Trans, good to see you. Is your conviction in DraftKings wavering? No. Heading into recession, no real path to profitability. Everything you say, Cayenne, everything you say is true. But the way I'm looking at it, and I'm not in a hurry, and I'm underwater, okay, on DraftKings. The gambling market has not changed since whenever my last DraftKings video was. You're still talking about 30% of the United States, right? And this interest rate world and stuff will change some things. I would never sell it before Ohio goes live, which is where I live. Ohio could be live as early as fall into December. More likely, it's going to be January, February in time for the Super Bowl. Then, since I live in the state, I will have a lot more in-depth looks at how things are going and think about the functionality. But no, it hasn't changed. And this, by the way, It's hard to buy DraftKings because it's not profitable right now, and there's so many other companies that are. But I will say, if you've ever had interest in it, summer is a really good time to buy in from a momentum standpoint, because the football season brings a lot of momentum for that stock, and that momentum will begin when football camps typically lead off. Sometimes it's late July, but certainly into August when you get preseason games, you'll see the buying activity in DraftKings start to go up. I just don't know how far it will go down before that time. Great price for Apple. So the problem, so Apple's buyback strategy will continue to produce returns. And I've really just kind of accepted that. It's a very hard stock to project because of their buybacks. But if you did some simple math here, so their forward PE right now of 22. Historically, pre-COVID, you're in 17, 16. Let's just say it's 16, okay? You start to get back here, and the iPhone wasn't quite as powerful of a monopoly as it is right now. So I'm going to go ahead and say 16 is probably appropriate. If we have more doom and gloom, you're at a 22. So 16 times, and I'm just going to take these consensus numbers, 16 times 656, and I'm doing this off to the side. 6.56 is a price of 104.96. So that was 2-second analysis. Now don't forget though, that was for the 2023 fiscal year. They ride in here for 2022. So yeah, if you're having massive meltdown and then Apple at 104, will you ever see that? I doubt it. I really do. Because their stock buybacks would push it so far back on the momentum side. So realistic, good price, assuming the news stays rational and they don't have like iPhone production problems. Maybe you're talking below 120, 115 would probably be a rare opportunity. But it's really tough to say. What's the low for the year? This is the low for the year. Is that what this is saying? 52-week range, 128 to 182. So yeah, I'm saying best price is below the current 52-week range. Again, you may never see it. You may never ever see it, but that's what the simple math looks like. Let's see. DraftKings has plenty of cash. Hold on, I'm too far back. Lion, there are better deals than Apple. Got it. DraftKings has plenty of cash. If management sees a slowdown, they will reduce the spending. Absolutely correct. And you are correct, Danny, that there are quite a few states on the on-ramp to profitability. So if you're curious for DraftKings, go back and look at their New Jersey case study, how it basically took 3 years to produce profitability. They're well in that range now, and you have other markets that are maturing as well. That's not the company as a whole, okay? That's individual state markets, and they have, off the top of my head, a roughly 3-year plan to profitability for each market as it opens. So when Ohio opens, there'll be a huge drain on resources to sign up new players, attack, and then that starts to pay off on paper anyway in 3 years. Let's see. There's a fight going on with DraftKings and Disney. We'll see who wins in 2025. Okay, I'll let you guys sort it out. Disney is trending in the right direction, I will say that, but not buying it. How about Salesforce and Amazon? I like both of those names for the long term at this price. Amazon, the thing that's sucking right now, big time, is just the decline in their earnings projections. They just keep getting hacked on earnings projections. And let me see if I can show you what I mean by that. I did this yesterday too on a video. Revisions. So here's the thing with revision. I mean, say what you want about analysts, and I get it. It's not for everybody. But there is a trend, right? There is a trend to revisions, and whether or not you believe an analyst price target, you can at least pick up on the trends that they're seeing. And when you have this over the last 3 months, but EPS down is 30, revenue, you only have 1 up, but you have 37 down. It's just like really, really hurting. And so right now, if we project through the rest of the year, I think Amazon, yeah, they run a traditional fiscal calendar. Right now, after the stock split, you got less than $1 per share. So it puts the forward PE at 117. So it's hard right now. It's very, very hard right now on Amazon to say that this is a steal of a buy point, but I'm very, very happy that I get pieces of Amazon in my QQQ. I'm very happy that I bought 2 or 3 shares of Amazon stock at somewhere around $2,500, and I managed to get out flat because things should be turning around, but here we go again with stupid gas and consumer squeeze. I think it's a problem. The thing that everyone should know by now is that meanwhile AWS is printing money. So I love the stock for the long term. I love Amazon as a company. I use it all the time. It's just really hard to say that this is a real bottom for them. All right, guys, I noticed it's 12:30 in my world, so I have to actually roll. But I want to thank everybody for coming out. Piyush, you also asked about Salesforce. Don't have time to put it on the screen, but I was surprised it fell again. And I think eventually Salesforce does turn positive. It's the same thing as Amazon. I think Salesforce, 3 to 5 years, easy win, particularly at current levels. But anyway, guys, have a great day. I will be getting back to a more normal schedule. Hang in here with me last 2 weeks of youth baseball season, and then you'll see more and more. But glad you guys came out, and we'll talk to you soon. Have a great day.